Hello, Namaste. This is Neeraj here once again, and welcome back to my channel, 𝐦𝐚𝐫𝐤 Stock Analyst. So, in today's video, I just want to tell you regarding that there is no connection between economy growth, GDP growth of a country, and stock market growth, means stock market return, stock index of that country. So, when many people talk about that, India's stock market has given 18% return in last 1 year, one of the best performing stock markets, because India is growing at the best rate of 7% GDP growth rate. So I would just like to give you some few more examples that it is not the Indian stock market is not the best return stock market. And then you will understand that why I am telling. I mean, you make up your own view regarding whether there is a connection between GDP growth and the stock market stock index return. So first, let us take first example from our neighborhood of India, that is Pakistan. So Pakistan Karachi Stock Exchange, if you take that index has given return of something like 63% in 1 year. And if you look at this for the same year, same time period, if you look at the economic condition of Pakistan, you will see that Pakistan inflation is more than 50% inflation. Okay, and currency devaluation has happened like 3 times, means it has devaluated to 3 times than 1/3 of what was its value against US dollar. And still the stock market is one of the best performing. I think it's in Asia, it is the best performing, 63%. Then take the example of in Africa. Africa's biggest stock exchange is Nigeria Stock Index, and Nigeria has given again 63% of the return, stock index return in last 1 year. You can check all this into data from any of the database. And you look at Nigeria's inflation. Nigeria's inflation is also about 30%. It's a country also very high inflationary pressure and actually by poverty. And if you look at the currency devaluation, it is also 1/3 it has devaluated against US dollar in last 1.5 years. But still the market has given 63% return, and growth is not doing much. I mean, it's growing at around 4 and 5%, but 4 and 5% is nothing, because when the inflation is 30%. So that is where you can say that return of stock market is because of the inflation. And the third country we will take, it's also a big country in Europe, it's Turkey. The Turkey's, if you look at the last 1 year return, is 50% stock index return. Its inflation is 70%. 70% inflation. Lira has devaluated more than 1/3 against dollar. And such kind of a situation, I mean, it's very difficult for the people day-to-day life to live there and to determine price and all these things. Wages are not sufficient. Such a high inflation, but stock market has gone up 50% index. Then the Argentina, the best case example. It's a country which has defaulted before also many a times. I think it is again on the verge of another default. It has given 200% stock index return. And inflation is 200%. So what to make of this? So what I am trying to tell you is that you have to, not necessarily you have to connect that GDP. Some countries GDP is growing, and that's why the stock market is giving return. In the same way, the conclusion is that you should not be very much complacent about that. Okay, India is growing fantastically. It is the biggest, highest growth rate in the world. Next year also it will grow at around 7% GDP as per the RBI. But there is also an anomaly which I find in the data of whatever the RBI gives. When RBI talks about that next year, they are talking about that GDP growth rate of around 9%. So when they talk about that it's a GDP growth rate of 9%, means its real growth rate can be much less than, because that 9% will be with the inflation. So inflation is suppose 4% also, then growth rate can be only 5%. So that is this connection. So you have to be very careful about trusting any data, even government data also. And the same way, what is the conclusion is that if you look at the market, our Indian market Nifty, I see that correction. There was some chart, now pattern is coming out like this way, that we may see 15% around correction in next 2 to 3 months. it may happen. So it may not immediately happen that from, so it may one day it is going up, 1 week it will be rising, and again it will come down like that, slowly, but the trend is on the decline, and I see around 15% from the top. So top had happened 2 days before, I think on 22,000. So from that around 50, but the same pattern what I see on the chart for Nifty 50 Indian stock index, which had formed in October 2021. Okay, and you had seen that market for 6 months up to June, almost 6-9 months, it had remained in the doldrums or in the consolidation phase, or what you call the declining phase, and ultimately it had corrected by 17%. The same pattern is now being formed again in the Nifty. So that is what I just wanted to share, that it can, in next 3 months you can see that market correcting by 15%. So that's it from my side, and if for any professional advice you can contact me. It's on a chargeable basis. Also I have a Telegram channel for regular updates, and you can look into my website www.𝐶𝐫𝐴𝐤𝐴𝐤𝐷𝗛𝐻.com for any of these articles which I come out with. That's it from my side. Ciao from Neeraj from Moscow. Love you.